Hi guys. In this video, I'm going to talk about, I think, something that most traders don't consider, at least in the beginning or even intermediate stages of their journey. This topic is called volatility drag, or also known as percentage loss trap. So I think a lot of starting out traders have experienced this, but maybe they haven't even realized it. It's basically when there's a lot of volatility in your equity, and that causes you to actually lose more funds compared to the actual percentages that you've been gaining, right? So let's say you take a trade, you risk 1%, you make 2% on that trade, great. And then the next trade, you get stopped out, you lose 1% or whatever that you're risking. And then you start to just add up these percentages, but you're not considering volatility drag. So I'm going to demonstrate it here in this Excel sheet that I made. Okay, so let's assume we have a starting balance of $1,000. And on the left here in the A column, we have trades. So let's say it's 1, 2, 3, 4, 5, 6. Let's just say all the way to 32 trades, right? Um, and you could say it's trading days, whatever. So let's say on the first day you make 10%, on the next day you lose 5%. Then next day you make 10%, on the next day you lose 5%. So it just alternates back and forth, okay? So basically you're making 5%, you're making 10 and then you lose 5. You're making 10 and then you lose 5. All right? Um another example, let's say a different trader, he makes 25%, then he loses 20. He makes 25%, he loses 20. He makes 25, he loses 20. And trader 3, he makes 40 and he loses 35. He makes 40, and this just alternates like this, right? This is just for an example. Okay, so these are the percentages these traders are making or losing per trade. So generally, the difference is 5%. 10 to 5, they lose 5 less than they make. He makes 25, he loses 5 less, so he loses 20. He makes 40, he loses 5 less, so he makes 35. This alternates all the way down to 32 trades, okay? Um, so yeah, the gross percentage gain out of all these trades is basically 80%. But let's just have a look, because these traders are not making 80% out of their $1,000. Okay, so we have to assume compounding as well, because you're using a percentage of your total balance. So trader A, he makes 10%, so he's up 100. He's up $100, so now his equity is 1,100. He loses 5%, he's down to 1,045, and then he makes 10%. He is at 1,150. Okay, so I'm not going to go through every single number, but let's see what happens to trader A at the end of the 32 trading days or 32 trades, whatever, it doesn't matter. He is at a balance of 2,022, which is 102% gain from his initial balance of 1,000. And trader 2, who's been risking 25% and losing 20%, he's just about break even. So he didn't gain anything out of those 32 trades, even though he had a net percent gain of 80%. Okay. And the third and final trader, who's been risking 40% and losing 35%, he is now down to $200. So he's lost 78% of his account, even though he's actually made 80% worth of trades, basically. So let's have a look at this graph. As we can see, the first trader has a nice equity curve, and he's slowly gaining profit, right? He's growing his account. Trader 2, he's just going up and down, up and down, up and down. He's winning more than he's losing, but he's going nowhere. And trader C, who wins half of the time, so he's quite happy. Wow, he makes 40%. Oh, he loses 20, 35. Look at his equity curve. He's almost blown his account. So let's say that trader C, the third trader, he actually loses. Oops. Let's say he loses 30% instead of 35. So he loses less. He loses 10% less than he gains, which is good, right? So let's just add this in. Let's see what happens to his stats. So these are alternating. Assuming if you lose 2 trades in a row, that could be quite detrimental, which we'll see in a second. Okay. So trader C has a gross gain of 160%, but he's still down 28% of his account. So he only has $724 from the $1,000 that he started with. Even though he gained 160%, he's down on his account. All right, so trader B is kind of going nowhere. And let's say he loses 2 trades in a row somewhere here. Look at that drop. I mean, he has a huge drop and then he starts ranging again. All right, so let's say he wins 3 trades in a row. So he goes up, he loses. So he's always kind of like break even. So in order to maintain his account, even at a 5% gain compared to his losses, he has to have an over 50%. All right. So let's see trader C. Let's say he gains 40%, 5 times in a row, and then he loses 30%, which would be the green line, right? He loses 3 times in a row. He's only up by a little bit, even though his win rate's higher. And if he happened to lose 30%, 5 times in a row, yeah, basically he's still where he started at, right? So you can see the effect of this on a trader's P&L, and I think this is something that a lot of traders do not consider. Let me just add this back into the chart. Okay, minus 30. Yeah. So if you couple this with win streaks, losing streaks, your win rate, the RR you aim for, you can see how this is quite important to consider. Just because you have a positive RR and a certain win rate, you can't just calculate it like that, because you may be missing this point. And if you're backtesting, then you also have to consider spread and commissions as well. So don't cheat yourself and just do some backtesting on TradingView and not consider volatility drag, commissions, and spread, because you'll be cheating yourself in the end. You're going to have to eventually trade real money, and that's what has to be incorporated. So you can't just show the market, hey, look at me. Look at his strategy and his win rate and this RR. Yeah, you should be able to make a lot of money, but you don't consider these things. So yeah, I hope you found this quite insightful, and I guess the takeaway for this is to consider all the factors that could be affecting your performance in your trading system. Do not risk too much, else you get hit by volatility drag. All right, eventually your account's gonna end up with nothing if you risk too much. 30%. Yeah, it just bounces up and down, and eventually you're gonna get to a point where you blow your account, because even this trader that's risking 40%, he's pretty how do you say, disciplined, in that he only risks the percent number. But you can imagine being up on a large account, and then like let's say $10,000, and you drop it all the way down to 2,000, and now you're feeling pretty bad, and psychologically that makes things even more difficult. That's another factor to consider. And you just risk and blow your account. Okay, you just risk your entire account on one position. You just go and you lose 80%, and then you only have like $100 left. What are you gonna do? $100 from a 10,000, you don't feel like having risk management anymore because it's so small in relative to your deposit. You just want to blow it, and then you just want to put more money in the account, and yeah, eventually blow it as well. So hope you found this video insightful and that it helped you understand volatility drag. So let me put the title here, and I hope you incorporate it into volatility drag, and I hope you incorporate it into your system and your trading. So that's it for this video. Thanks for watching. See you again next time.